Good morning once again, and welcome to another live technical analysis session. We're going to be starting off with the euro against the US dollar. Now, we should talk about, in general, the recent developments, the release of the ADP figure yesterday, the Fed's minutes, and the comments made by Governor Waller. So, that is quite a lot to digest, and we should get started with one thing at a time. So, the ADP employment figure came in lower than expected, and that figure was for December, essentially implying a loosening labor market. That in turn may have weighed on the US dollar and thus may have seen the euro potentially gaining against the dollar during that specific time period. However, moving on, after that release, we had the comments made by Fed Governor Waller. Essentially, Fed Governor Waller echoed similar remarks as was shown in the minutes. But in particular, Waller essentially said that the incoming administration's economic and immigration policies may not affect his stance on monetary policy. That appears to have been echoed as well in the FOMC's meeting minutes. The minutes initially may have, once they were released, may have had no particular impact, so there wasn't a sudden move to the upside or to the downside following that release, but they were predominantly, in my view, hawkish in nature. I would base that hypothesis on a couple of things. The first is, if not, even though he was not mentioned by name, there is some concern about President Trump's economic policies and immigration as well. Essentially, there is some concern as to whether or not the Fed should be preparing to act accordingly. That is now being taken into account by Fed policymakers. I would expect that sentiment to be echoed by today's central bank speakers. If you look at the calendar, we have a numerous Fed speakers later on today, starting from the late European trading session, heading into the US session. And thus, we may see increased trading volatility throughout the day. Now, in general, in the minutes, it was also stated that the bank is reaching the current point upon which they could begin to gradually cut interest rates. That was not the specific wording, but essentially they're implying that they have reached a point where they don't need to aggressively cut rates. That's why I believe it was predominantly hawkish in nature. And then if you combine that with implications of a Trump presidency and the potential of increased inflationary pressures, then overall it may have been perceived as hawkish in nature. That is why we could also have seen the dollar gaining against the euro, the cable gaining against the JPY, although not as much, but has gained against the loonie and the Aussie as well. So for me, the minutes were relatively hawkish. I would not be surprised to see central bank policymakers echoing those remarks later on today, which in turn could aid the greenback during today's trading session. Before we continue, however, I would like to note that the US stock markets will be closed today, as today is a national holiday in the US following the death of former President Carter, and his state funeral is set to occur today, which is why the markets will be closed and will be resuming tomorrow. Moving on to the euro, from a technical point of view, you can see that the pair has moved in a downwards trajectory since our technical session yesterday. The target for the bears could be this S1 level at 1.0220. The RSI is currently reading a figure of 38, which implies a bearish market sentiment. The Bollinger Bands continue to be tilted towards the downside, further supporting a hypothesis. I would opt for a bearish outlook for the pair, as we had stated yesterday. So I would be bearish on the euro against the dollar. Now, if it breaks below S1, we could potentially we could potentially imply that the next support level is very close to parity. Now, when the euro aims for parity against the US dollar, we might see buying pressure potentially. So I would not be surprised to see S2 being met with heavy support from the bulls. Nonetheless, if it breaks below S1, we would maintain that bearish outlook down to S2. For the USD against the JPY, now it is moving in a predominantly upwards fashion. You can see that this resistance level that we had placed together and have spoken about yesterday and last week as well is at 158.35. It has been constantly verified. So during yesterday's and today's trading session, if not 3 days ago, so on Friday, so earlier on this week as well, that R1 at 158.35 is a significant resistance line. If it is broken, we would maintain our bullish outlook with the next potential target being at R2. Now, if you would like to see the potential area upon which the particular pair could meet some resistance, you can click on insert on your MT4, MT5 platform, and then you could go to shapes and you can use a rectangle. And this way you can shade the potential area of resistance or support you may expect the particular pair to encounter. For example, we've placed our two resistance line at 162.00. Now, this could be the actual resistance line. However, I wouldn't be surprised to see the pair meeting resistance in this particular area upon which I will be shading currently. And let's just take this into account. So bringing that up, it doesn't look that nice on your screen. So let's see what other color we could use, which might make it easier. Turquoise. I think that is better for your eyes as well, and for my eyes too. No, we're not editing the bulge bands. We're actually editing the line 162. So that would be my resistance line, and then we just right. Bit annoying, but that's MT4 for you. So the area shaded in turquoise is the area where I would not be surprised to see the pair meeting resistance. My resistance line may be at 162, but we could see some hesitancy or selling pressure from the bears within this area. Why? Well, you can see that it wicked down upon this level, which our rectangle's lower boundary is, and then broke below. This area, I would not be surprised to see heavy selling pressure. Thus, we could see the pair moving in an upwards fashion, wicking, forming a wick to R2, but closing below that R2 level. So this area, I wouldn't be surprised to see the pair meeting resistance. Nonetheless, the R2 line for us is at 162, but this is an area we would like to monitor. That being said, we can also shade and show with a rectangle the potential support area, which we could expect the pair to meet. That is, at this bottom where you can see that the pair has seeked liquidity and then has moved higher. This area for me showcases buying pressure. So a support zone, if you would like to call it that. Nonetheless, the support line will be at 155.35, and that's what we have placed together. Now, if the pair fails to break above this R1 line, which you can see it wicked on, it closed on, and has opened on. So it's validated it on three numerous occasions that this is indeed the resistance line. If it doesn't close above, that for me would be an indication that the bulls may have lost their momentum and may be ceding some control to the bears. In such a scenario, I would opt for a sideways bias. But for now, they are sized at 65. It is moving in a relatively upwards fashion. It's testing that resistance level again. It's weakening the resolve of the bears at this point. So I would maintain an optimistic bullish outlook. I'm concerned that it hasn't broken through today, but still predominantly moving in an upwards fashion, and also taking into account our expectation that the minutes were relatively hawkish in nature and that might be echoed later on today, we could see the dollar gaining against the JPY. Now, I would also like to note, however, above R2, we might see an intervention by the BOJ. So, hypothetically speaking, if someone was looking at it at this area to buy the pair, so going long, etc., it would be potentially risky in my view, as we may see an intervention. But that being said, it's never a given. I'm not a fortune teller. I can't say exactly how the bank will act. I can only estimate and guess as to what may occur. Nonetheless, from a technical point of view, the RSI is at 65. It does appear to be moving in an upwards fashion. But as I'm going to say again, it needs to clear R1. If it fails to do so, I would opt for a sideways bias between S1 and R1. Moving on to cable, so that's GBP USD, we are using the daily chart. I would like to point out how it has broken below this support level, which is now turning to resistance. 1.23750 is support into resistance. The next potential target for the bears might be at 1.220, which is our S2 support line. That being said, with the pair having broken below support and resistance, we also need to adjust our support and resistance lines, which also includes the text labels, so that it is easier for you looking at home to see where these levels are. Then you could actually replicate these on your own charts and you could monitor the pair and see how it reacts to those levels. I could be correct or I could be wrong. But it would be interesting from an educational point of view to see how the pair reacts to your own support and resistance levels. Because what I might consider myself as a support and resistance level may not be something you agree with. And that is fine. Not everyone should have the same opinion as to where a support and resistance level is. Might be slightly higher, might be slightly lower. It is up to your own interpretation. But these are my support and resistance levels. If I am wrong, I will readjust them. If I'm correct, I'll keep them. Now, I have placed S3 at this particular level. It is at 1.1925 when I round that up. What I have seen, however, at this point, as you can see, this was our screen. If I go to the left, there is absolutely no recent historical data that can help me make this decision. You can see to the left hand side of my screen, that's where R1 is currently. So I don't have data. I need to go back even further. I can't use this because I'm using it already for my S2 level. And to the left hand side of my screen, there is no price action, which means I need to go back even further to roughly the 1st of March 2023. Now, what I'm seeing here is a very nice price action. Lower high, lower low, lower high, lower low, lower high, lower low. Voila. Cleared, moved higher. So this is a very nice level. What I am also noticing is that we had this wick here, a second and a third. When it broke, it came back up, it met resistance, and then it opened on the resistance to support level. So 1.1925 for me would be valid. Moreover, you can see that the distance between S1 and S2 is relatively the same between S2 and S3, which also makes it much nicer. It's not an exorbitant amount as if I was placing my support line, let's say, down here. I would be irrelevant. And we are already using the daily chart. If it was a 4 hour, we would be having a different conversation. But still, it's a daily chart. I can see that this level has acted as support and resistance. And if we look back, it's also acted as a support and resistance level at other occasions. Thus, this would be my S3 support line. So let's come back to the most recent price action. Right click, turn this to green, then adjust 1.1925 for RS3 support line. I need to fix these text labels. R3, R2, R1. So these are the resistance lines. Support S2 becomes S1, S3 becomes S2, and then we need to change this text label for it to become S3. So this becomes S2. Very nice. S3. Let's also see if we can add a downwards moving trend line. Downwards moving trend line needs 2 touches to be formed and a third to be validated. This was a resistance level. Let's take this high here. Wicked through, seeked liquidity from the stop losses placed at this level, making people exit the positions. Once it managed to do that, it continued moving lower. Downwards moving trend line formed from this high. Second touch for it to be formed, a third to be validated. Even though it pierced through, does not mean it has been invalidated. For me, it needs to close above, or at least on it. Wicking through is seeking liquidity. So we also do have a downwards moving trend line. The RSI is at 32, which does imply a bearish market sentiment. So we would maintain a bearish outlook for the particular pair. For the US dollar against the Canadian dollar, so the loonie finding support, that's nice. We wouldn't be exactly bullish for the pair. This trend line is, yeah, should have been edited. Formed, touched, and the third for it to be validated, upwards moving trend line. Still sideways moving channel around here. If you remember yesterday, this is, I'm not sure if we did it with the loonie, but this is a point where we would have liked to see some resistance, as you can see. Nice. Wouldn't be exactly bullish. The RSI is at 60, but if you look at the price action, it has re-entered the sideways moving channel, so it would be a bit cautious for the particular pair. Would like to see it testing R1 and failing to break above, and then staying between S1 and R1. Goes without saying, if it clears above R1, we would opt for a bullish outlook. But for now, I would maintain a neutral outlook, as this might be trendless. For the Aussie is moving still in a downward trajectory. The RSI is at 32. I think now would be an appropriate time for us to adjust our support and resistance levels. Uh, let's bring this slower. For this, I'm going to be using the closing and opening of this bullish and bearish candle respectively. Seek liquidity from the sellers here and then continue moving downwards. The trend line continues to be validated. Let's add a couple more shapes. So I'll show you with a circle shown here. And then hasn't touched here. So 1, 2, 3. Nice. This becomes R1. Tomorrow's Asian session is pretty dull, with the only thing we would like to note being the Switzerland's unemployment rate, if I'm not mistaken, at 8:45 a.m. GMT plus 2. So that might be of interest if you are looking at the Swiss franc. If not, so it'll be pretty easy going. So the column before the storm, which is the US employment data. The US employment data, I'm actually very interested in seeing what actually does happen. Some estimates have it at around 165K. Majority of economists are expecting the unemployment rate to remain steady at 4.2. Now, if you ask me, 170 and 180K and above is still quite good. Even though it might be lower than last month's figure, it doesn't necessarily mean that the labor market is collapsing. It's still strong. What I would like to see is the unemployment rate. I think the unemployment rate may garner more attention and more of an impact if it doesn't come in at 4.2%. If it does, then yeah, maybe the NFP figure could have the the majority of the impact. But for me, it's more important to see that unemployment rate. That will be interesting because the Fed thinks that their dual mandate is in play. So they have eased inflationary pressures in the U.S. and then the labor market has evidently remained tight as well. So they're actually making some good progress. They're a bit concerned though with Trump's policies, with immigration, etc., that it may cause some inflationary pressures. But some participants and policymakers are not really taking that into account. Whether or not they are, I think they should. Being prepared for any possibility would be the best course of action. But I'm not a central bank policymaker, so my opinion for that is irrelevant to them. I'm placing my support level at the point upon this bearish candle's wick touched on. At this level, it would be far too low. Can't place it here. Too close to that S2. It found support, seek liquidity, and then moved higher. So this may be a support level. Not that confident on S3, but with what we have, that is the best we can do. And you can see that it's already still far away from that S2 line. Let's see again. Uh, let's see. Instead of using just the wick, now this is a better picture. Resistance, support, and support. Seek liquidity. This is a bit, I would say, a bit better. So this would be S1, S2 at 0.6055. This 6245. So this would be R1. So we've placed R1, R2, R3, and then 0.595. Let's round that up, round that down. This is S3. Liquidity cleared out the cells. Bearish for the Aussie against the US dollar. Dollar gaining against the Swiss franc. Crude oil, for those of you that have been tuning in since the beginning of the week, you can now see what I was saying on Tuesday, that I wanted to see a retracement back down to 72.10. This is what we have been expecting since Tuesday. So if you were on Tuesday's live or looked at it later, this is what we wanted. It cleared S1, which was the upper boundary of the sideways moving channel. And we said that we would like to see it moving back lower to validate that this is indeed resistance turn to support. It's not exactly there yet, but it does show that around that S1 level, there is a support level. I would still opt for a bullish outlook for crude oil's price. Now, there are some various degrees of fundamentals. The one is President Biden's executive order, which is classified as a last hurrah for environmentalists, upon which he has essentially banned new licenses for certain areas of the US coast to be drilled. So, for gas explorations and oil explorations, etc., etc., there are concerns about the supply, which in turn could aid oil prices. From a technical point of view, RSI is on 16, so it's still a bullish market sentiment. If it stays above S1, we would maintain our bullish outlook. That being said, we can also see if this has formed an upwards moving trend line. Inception, tested once, twice, and a third. Valid upwards moving trend line. Cleared resistance turn to support. So, from a technical point of view, I would still be bullish as long as this S1 support level holds up. If it is broken, I would opt for a sideways pass between S1 and S2. If it clears S2, then I'm bearish down to S3, 61.45. That's what I would be looking for as a potential target. For gold, same thing we said on Tuesday and on Wednesday. Now it is a bit weird that gold has moved upwards when the dollar has been gaining against its counterparts. But that's what we were saying yesterday. We would opt for a sideways bias but we did have an upward swing trend line. The issue I'm having currently is that the RSI is at 55. At the beginning, well, earlier on today, I opted for a sideways bias for the pair because it hasn't broken above R1. As you can see, and I'm going to zoom in now, this is a daily chart. It is about to clear this R1 level. If it does so, I would be bullish, and the next target could be at R2, 2725. If we drop down to the 4 hour time frame, you can see it's broken this resistance line. It pierced through, but it closed above. As you can see, it seeks support. Took support. So buying pressure, RSI is at 63. I would currently be bullish for gold's price. If I was on a 4 hour, this could be my next resistance line, 2683. And then I would be aiming for this wick here, 2699, just shy of 2.7k, which is a nice round figure. But yeah, this is where I would be aiming for to place my resistance line on a 4 hour time frame. On a daily, it's a different story. But now taking into account the 4 hour, we can be bullish. Uh, and I have made a mistake. There we go. So having seen the 4 hour, we are now bullish for the precious metals price. On a daily time frame, this could be the target for the bulls, 2,725. Their size increasing. But for this bullish outlook to continue, we would require the precious metals price to close above for the day above R1. If it fails to do so and comes back down, we would then opt for a sideways bias. But for now, we are bullish. We would maintain a bullish outlook, I should say. Intel was staying in a sideways bias. Microsoft needs to clear this low for that to continue, but on balance volume increasing 43. I'm still bearish for Microsoft. You can see Nvidia testing S1. 138.70. Or says at 50. Still bearish. ExxonMobil. Hmm. So I guess it's time. Oh, oh. For ExxonMobil, it broke above the resistance, turned to support, and was acting as support. We said yesterday that we were bullish for the company stock price, although this was a bit of a concern. Now it looks that's why. This was a retracement. But what we can take from this is that this support level was actually validated once again. Not the wick. It's actually quite right on the money. 107.60. Exactly. Let's see. A high 107.64. Still good enough. Now, it has gapped lower, which did imply heavy selling pressure. Might be an issue. So we're no longer bullish for the company stock price. That's how this works. But this is a gap that may be filled in the future. So I wouldn't be surprised to see the company stock price filling this gap and then continuing lower as well. So would be nice to know. Nonetheless, we are no longer bullish for ExxonMobil. I am almost certain that the FTSE has remained in a sideways fashion. Of course. I mean, for the FTSE 100, we can keep the same support and resistance levels for the next year, the way it's going. And you can see May 2024. FTSE is, look, 30th of May 2024. Up until today, barely escaped 8.3K and moved towards 8.4, but it's back down now. And yeah, sideways for the FTSE 100. No reason for us to change anything. Tesla, RSI dipping below 50. This might be a bit of a concern for Tesla stock price. If it clears this week here, then 327.78 might be the next target for the bears. I would be bearish for Tesla stock price. Same with same with McDonald's. Death cross RSI sharply dropping below 40. It's at 38. It's not looking good. Oh, okay. Hasn't cleared 40K. Still, even though the RSI is moving towards 50, we do have this upwards moving trend line, and as long as this stays valid, I would still be bullish. This could be an ascending wedge pattern as well, ascending triangle. LVMH, nothing major. Between 594 and 665. Sideways, not bullish, neither bearish. Lockheed Martin finally recovering after this. What a drop. There is something that I would like to see with the Lockheed Martin. I'm going to go to indicators volume. So breakaway gap, volume high, continuation gap, and then exhaustion gap. This might be a reversal. RSI is also below 30, which implies that this is oversold. There is a gap, might be filled actually here. 480.90. Might see a bit of a reversal for the company stock price. I mean, continuing, not continuing, considering how much it has fallen, it does make sense. So, wouldn't be surprised to see a bit of a retracement from Lockheed Martin's stock price. Volkswagen had high hopes, still between 89.50, 86 and 89.50 per share. Airbus, island reversal pattern. Gap. I am bullish for Airbus's stock price. Rolls Royce. Google, gap was filled. Nice. Uh, Not exactly bullish, are we? Deutsche Bank resting on 16.70. That's nice. That's JP Morgan. Close for today, but these are the futures markets, so they're open. Uh, High, lower high. What we said yesterday. Bit of a concern for the Nasdaq. Same for the S&P 500. Not a very good start for the year. Eurostox 50. Not bad. Not bad for the Euro stocks. Would I be bullish though for the Euro stocks? Golden Cross. Let's see. Uh, but the RSI is at 62. Cautiously optimistic for the Eurozone. But we do have elections soon. Let's see what happens. But not too bad. Has anything changed since we've seen it 20 minutes ago? Nope. More or less the same. That's pretty much it for today. It's going to be a relatively easygoing day. Like what I would point out and be concerned would be the speeches by Fed policymakers and BOE's Breeden later on today. That might be of interest. Tomorrow, during the Asian session, we said that we have Switzerland's unemployment rate. And of course, tomorrow we have the NFP figure, the US employment data. Uh, First release of the year will be very, very interesting to see what comes out. Looking at the unemployment rate, though, in particular, NFP, 180K would still be a good figure. Expected 160, roughly 160 and 170. Still would be lower than last month's, but still not bad for the US labor market. And then we also have Canada's employment data, if I'm not mistaken, later on during the day. So there is going to be a bit of an interest tomorrow, and considering that the markets are closed today, maybe increased volatility tomorrow. But the futures markets are still open, as you can see. Uh, where was this? They're not open. Yes, so they're open. Very nice. So with that, that does it for today. Thank you all for tuning in, and we will see you next week.
Recording in progress. Okay, hi everyone, welcome to today's webinar. So for today's session, we are going to be talking about price action. We're going to give about 1 more minute to let more people join the session before we get started. So in the meantime, let me know in the chat if you guys can see me and hear me, and can see my slides as well. And then we'll begin in about 1 more minute. Thanks, everyone. Okay, let's go ahead and get started. So, as per usual, a risk warning and disclaimer, our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Rocket, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're going to start off by talking about the anatomy of a candlestick, some price action trading approaches, and then we'll look at the different candlestick patterns. And then lastly, we'll combine candlestick patterns with what we already know, such as your support and resistance, your Ichimoku, and some other indicators as well. If you guys have any questions throughout the webinar, feel free to let me know in the chat, and I'll try my best to answer all of them. Okay, let's go ahead and get started with the anatomy of a candlestick. So here's the we have a bullish and a bearish candlestick. On the left, we have, so basically the tip of the bullish candle is the high price, and the close price starts when at the start of the body of the candlestick. If we look at the lower wick, the open price starts at the bottom of the body, and ends at the lower price, which is at the end of our candlestick. So obviously the opposite is true for our bearish candle. Your high price would be at the top of your upper wick. Open price would be at the start of the body of the candlestick. Close price at the end of the body of the candlestick. Low price would then be at the bottom of your lower wick. So here's our price action trading approach. Okay, we have the reversal and the breakout. So here's an example. We have price moving within a ascending trend channel. Okay, and we have what's called a morning star formation right at the tip of our um at the lower band of our ascending trend channel. Okay, so when this morning star formation starts, we are expecting a reversal to continue within the ascending trend channel. You can see that's exactly what happened here. Okay. Next, let's look at the breakout. So we have this area here, this resistance area, which is with one swing high, swing low, and a couple of swing highs. So basically, when there are bulls and bears that respect that area, or there are swing lows and swing highs that respect that area, it's basically called an overlap level. And this is a very strong resistance area where we are expecting price to break through. Okay, and you can see exactly that's what happened here as well. Okay, and how do we know that price is going to break through? Basically, from again the formation of your candlesticks. Here we have what's called the three white soldiers. So if you, there are many formations of candlesticks out there. So if you just Google, there will be many templates that you can take a look at. So you don't really have to remember off the top of your head the different shapes or formations of these candlesticks. Just as long as you are comfortable using a couple of them, you can always refer to Google for any templates or any guidelines on the different shapes for candlesticks. Okay. Okay, so moving on, we can see after this three white soldiers, price broke out really strongly and rose above our resistance area. Okay, so before we get started in our and we dive into the different candlestick patterns, this is basically what price action is. So it's basically the movement of a security's price. In this case, would be Forex. Plotted over time. So that's why we are looking at specific candlestick patterns or which tell us the price movements without relying on the different indicators or even algorithms. So it's all about understanding the market's natural behavior. Okay. And then we'll show you at the end how to combine these natural market's natural behavior, which is standard price action, how we combine that with our indicators so that we get a greater understanding of the direction of price. Okay, so let's get started. So we're going to start off with the three single candlestick patterns. We have the hammer and the hanging man, which are just opposite of each other. Okay, secondly, we have the inverted hammer and the shooting star. Again, these are just the opposite of each other. You can see the difference in the shapes. So the upper wick would be a lot smaller on a bullish or a hammer. And your lower wick would be a lot longer. Whereas for your hanging man, we're looking at a bearish candlestick, but looking at the same shape. So again, this is a bullish candlestick. This is a bearish candlestick. If we look at an inverted hammer and a shooting star, again, you see the shape of the candlesticks are exactly the same. Here we don't really have a lower wick that we're looking at. We're just mainly the body of the candlestick as well as the upper wick. So for both of these, this is a bullish candlestick, that's why it's green, and a bearish candlestick, but exactly the same pattern. Okay, and next we have the dragonfly doji and the greystone doji. Okay, so again, we can see price moving um or rather these candlestick patterns are exactly the same. It's just that in this case we are looking at a bullish candlestick pattern, and over here we're looking at a bearish candlestick pattern. Okay, next let's look at the top two double candlestick patterns. Okay, so here we have bullish engulfing and bearish engulfing. So again, like we mentioned earlier, we have the exact kind of same pattern, just that one is moving upwards and one is moving downwards, since it is bearish. Okay. Okay, so let's move on. Here we have the second double candlestick pattern. So for this one, we are looking at tweezer bottoms and tweezer tops. Again, the candlestick patterns are exactly the same. And it's just that we are looking at the price looking at a reversal from down to an up trend, and on our tweezer tops we're looking at a reversal from the uptrend to a downtrend. Okay, next we're looking at our top three triple candlestick patterns. Here we have our morning star and evening star. So our morning star is kind of a signal that price is going to reverse again, similar to our engulfing pattern. If I go back, oh, rather similar to our tweezer bottoms, you can see when we are able to spot a morning star, price is reversing in its trend. Evening star, similarly, it's also reversing in its trend by giving us a bearish direction instead. Okay, so for the morning star, it's typically occurs at the end of a downtrend. That's why we say it's a reversal. So the first candle, which is this red one, it's a long bearish candle, which indicates a strong downtrend. Okay, whereas our second candle tends to be a smaller shape, can be bullish or bearish actually, that gapes down and it shows indecision in the market. So this can be your doji or even a spinning top that we talked about earlier. Then your third candle, which is this green one here, would be a long bullish candle that closes well into the body of the first candle, signaling a reversal. So the pattern is actually more reliable when this third candle here, when it closes above the midpoint of the first candle. So you can see the midpoint will be somewhere around here. So if it closes somewhere around here, that's a good sign that price is going to continue in the uptrend. Okay, so obviously the opposite is true. For an evening star, we have a long bullish candle here, indicating a strong uptrend. Then we have that same doji candlestick here, showing indecision in the market. And then the last candlestick is basically a long bearish candlestick that closes well into the body of the first candlestick, which we see the same thing happening here. Okay, let's move on. Okay, so next we have the three inside up and inside down. Here we have a opening candle, which is a bearish candlestick, and followed by a green bullish candlestick, which is much smaller. And the opposite is true for a three inside down. Okay, so again, these are indicators of potential market reversals. That's why for our inside up, we can see a downtrend reversing up into an uptrend. For our three inside down, we see an uptrend turning into a downtrend. So for three inside up, we would see a first candle giving us a long bearish candle, indicating a strong downtrend, and then followed by a smaller bullish candle that is completely contained within the body of that first candlestick. That's why you see it completely within this area here. Third candle would be a long bullish candle that closes above the high of the first. Okay, so that confirms your reversal into an uptrend. Okay, opposite is true again for your three inside down. So starting off, we have a long bullish candle, which indicates an uptrend, strong uptrend, and a smaller bearish candle here that's completely contained within the body again, confirming. And then lastly, the long bearish candle closing below the first candle, confirming the reversal. Okay, we have a question here. What time frame do you see good setup for signal? Okay, so the time frames that we normally would use for these candlestick patterns is completely up to you actually. Um, we just normally like to do our analysis on swing trading. So that would be like your medium term trading, we're looking at 4 hour to your daily charts. You can also go down to your shorter term trading if you are a day trader, or your intraday trading, which would be about 30 minutes to 1 hour. We typically won't recommend you to go below 15 minutes just because it tends to get a little bit too noisy on those shorter time frames. Um, but yeah, especially for candlestick patterns, it doesn't really matter which time frames you use. Just yeah, those are just the ones that we normally like to use. Would be 4 hours daily, 1 hour. Yeah, but the lowest we will go is 30 minutes. Okay, it will probably be easier for you to catch these reversals for candlestick patterns on a shorter time frame as well, because patterns on the shorter time frame, so like your 30-minute and 1 hour charts, can kind of provide you multiple trading opportunities throughout the day if you are looking at intraday trading. So those might be better for candlestick patterns. Okay, so now let's look at combining candlestick patterns with what we already know. Okay, we're going to start off with support and resistance, followed by our trend lines, oscillator indicators, and momentum indicators. Okay, let's get started. So again, if you guys have any other questions, feel free to let me know in the chat. Okay, So support and resistance is basically the price at which an asset's price tends to stop falling, which would be your support level, or stop rising, which would be your resistance. So you would identify these levels using technical analysis tools such as your trend lines, moving averages, and chart patterns. And these would be your swing highs or your swing lows. Okay, so here's an example. This is just a really quick recap on your support and resistance so that we can kind of go through how to identify these levels with your candlestick patterns. Okay, so here in this chart, I have drawn out our swing highs and lows for you to look out for. The swing low would of course be your first support, and your first resistance is basically the level that is closer, the swing high that's closer to where price is currently at. Okay, next. So here's an example of an insignificant swing. So these levels are bad to use for your um for Fibonacci points. Here we're talking about Fibonacci, but they are bad to use for any kind of resistance or support levels that you're looking at. Okay. Yeah, here's another example of insignificant swings. Okay, so you can see there aren't really any clear patterns here. No real swing highs or swing lows. Okay, and here is an example of significant swings. So there is a very clear move up and down with obvious peaks and troughs and a very clear market movement. So these are really good levels to use for your support and resistance. And they're easier to spot for um, your candlestick patterns as well. Okay, someone asked, what's the need of learning candlestick types and what roles do they play in trading? So they actually play a pretty significant role. Firstly, would be each candlestick kind of encapsulates a lot of information about the price action within a given time period. So, like we went through at the start about the anatomy of your candlestick, it includes the opening, the closing prices, the high and the low. So, it tells you what the sentiment of the market is as well. So, for example, a long bullish candlestick would suggest a strong buying interest, while a long bearish candlestick would then suggest stronger selling interest. So that would probably be more useful on your shorter time frame. Again, most of these, I can't tell you whether it's useful for you as a trader, because everybody has different strategies and trading techniques. But yeah, it is still important to know the different patterns. Okay, because like we went through the different types of candlestick patterns or the top ones to use, those can help you to identify the beginning or the continuation or reversal, so on and so forth, or the ending of trends, example. So like I think just now we went through a bullish engulfing pattern. So that would indicate the end of a downtrend and it might indicate a reversal to an uptrend. So that allows you to predict future price movements based on your historical data as well. Okay, so yeah, so all of the webinars that we have, like, and all of the tools and strategies that we give you might not be applicable for you personally as a trader, but it helps to have multiple tools so that you can confirm your indicators, by using your trend lines, all of these support and resistance levels as well. It just basically helps to confirm your analysis. Oh, and another important thing would probably be that the candlestick patterns can help you to determine your optimal entry and exit points as well. So that's why we're going through this resistance and support recap as well. So that because resistance and support levels are often really good levels to use for your entry and exit points. So these candlestick patterns further help you to determine even better points as well, especially if on these support and resistance levels, you can spot a pattern, candlestick pattern there. Then it further confirms your analysis. Okay, we have another question. Let me see. On a bearish setup, is there any white soldier candlestick which will indicate that there's possibility for support breakout? Um, the three white soldiers typically refers to a bullish setup. On a bearish, in the bearish context, okay, maybe let's go back to my slides. I can't really remember the patterns off the top of my head as well. Um, yeah, so for bearish, we would be looking at the three black crows for a bearish setup. Okay, I hope that answers your question. So these are just basically three consecutive long body bearish candlesticks with progressively lower closes, indicating a stronger bearish sentiment. Okay, so the opposite of a three white soldier candlestick pattern. Okay, so for example, once you're able to spot this pattern, you might want to use your momentum indicators like your RSI or MACD, for example, which show you if they show you a bearish divergence or moving into oversold territory, that can signal weakening bullish momentum and potential for a support breakout. Okay, okay. Let me get back to my slides. But yeah, let me know if you guys have any other questions. So here's an example of significant swings. Very clear market movement here. And support and resistance. So these levels, as I mentioned earlier, are used as your take profit, stop loss levels, entry, exit, so on and so forth. But an important thing to note is to make sure that your swing highs and lows, there are multiple swing highs and lows that line up together so that it strengthens your entry and exit levels. Okay, so there are at least two swing high or low levels that line up nicely. It's a much better level to use. So that's why we want to try and find levels where these might line up. So it doesn't have to be exactly at the same level as long as it's near, that's good enough. Okay, so let's look at how to pick your starting point for your support and resistance and your entry exit levels. So when picking the starting point of pivot, entry, support, resistance levels, there are a couple of rules. Firstly is to check if there's a swing high or low, pullback or overlap level to start from. Next is to go back as far as possible without intersecting too many bodies of candlesticks. Okay, so we have some swing highs here, where the price, or rather where the resistance level cuts the wick of the candlesticks, that's fine. Over here, it's kind of cutting the bodies a little bit, so that's not too preferred, but that's fine as well. So some more examples here. Okay, you can see when it cuts through nicely just one body of the candlestick, that's fine. This is something that we want to avoid because it's cutting too many bodies of candlesticks. Okay, we just want clean cuts of just the wick. Okay, here's another example. Take note of this red highlighted area because we want to avoid intersecting so many candlesticks. Okay, Okay, now let's look at the pullback and the overlap. So I did kind of mention the overlap earlier, but a pullback support is basically before an overlap occurs. So it's a strong level of support and resistance, and it breaks out from previous resistance level, and price is now dropping back to visit it again. So when a pullback support level lines up with a Fibonacci level, it's very powerful. And these levels are also made powerful when you are able to spot a candlestick pattern as well. So this works well when it breaks a significant swing low and then starts pulling back to it. It's even better if there are multiple Fibonacci levels that line up with it. Okay, so now let's look at the pullback resistance. We have some swing lows here. Okay, we have three swing lows here, and price is breaking below the swing lows, and we're looking at it, we're expecting it to hit towards that same level and reverse off of it. Okay, that's exactly what a pullback resistance is. Now for pullback support, we're looking at a resistance. So here we have three swing highs, making it a pretty strong resistance level. And then price has broken out of the swing high resistance. Okay, so it's broken out of it, surpassed it, and now we're expecting it to reverse back to that same level. Okay. Okay, I'm just gonna. Okay, so now let's combine our pullback and overlap levels. Okay, I already mentioned the pullback support earlier, so let's talk about our overlap levels now. So an overlap level, like I mentioned earlier, is basically when price comes back to it like this, um, and it actually reverses off of it. So when we have a swing high and a swing low that line up nicely, that's an overlap. Okay, so here we have a big swing high resistance here. The moment price surpasses the swing high resistance, it becomes a pullback support. Okay, and once we see price pull back to that pullback support level and bounces off of it perfectly, that then becomes an overlap support. Okay, here's another example. We have a couple of swing highs here. Okay, and price breaks out of the swing high resistance and pulls back to it. So once price breaks out of it, it becomes a pullback support. Once price pulls back to it and bounces off of it, then it becomes an overlap level. And once price bounces off of it again, it now becomes an overlap support. Okay. Okay, another example. So here there are multiple swing lows in line at the 33420 level. And once price breaks this level, it then becomes a pullback resistance. We can see price has tested this level 3 times, making it a strong overlap resistance level. And we can see price surpass this level again to become a pullback support. Lastly, it tested this level and bounced off of it, becoming an overlap support. Okay, so now let's combine all of these with our trend lines and price action. So here's what a trend line is. Just to recap, as it's a valid trend line if there are at least 3 touches on it. So we have one swing high, two swing high, and actually four swing highs here. Okay. Here we have price moving within an ascending trend channel with multiple swing highs again and swing lows. So what makes it a valid trend channel is if there are two touches, minimum two touches on top. Here, of course, we have three. And at the bottom, we also have three, but at least two touches on top and below, that's good enough. Okay. So here we have price moving below or bouncing off our Ichimoku cloud. And here we have a swing low support, price breaking out of it, and we are expecting price to um, continue to bounce off of it. Okay. Okay, are there any other questions? Okay, if not, there was a question about the um which I think there was a question about the time frame. So let's briefly go through that as well. Okay. I just wanted to talk about which time frame to use, just really quickly. So here's an example of price. You can see it's um kind of messy. There isn't really a very clear market structure. And this is on our M15 chart. Okay. Now, if we change that and we look at it on an H1 view, the exact same chart, just on a different time frame, you can see the market structure is a lot clearer. Okay, so the thing to learn here is that at the very basics, the clearer the swing low and the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. Okay, so it doesn't really matter which time frame you use because that's very dependent on your own lifestyle and your own trading methods. But yeah, as long as you make sure that your market structure is clear, that's fine. Okay, so yeah, so typically traders will choose at least two time frames, such as your short-term time frame and longer-term time frame. So like I mentioned, we don't go below 15 minutes because it's kind of how can I set YouTube? Okay, so let me get into that in a bit. But basically we don't go below 15 minutes because the charts tend to be a little bit too messy on those time frames. So your short-term time frame is used to identify the most recent trends and price movements, which is why again just now I mentioned that we if you look at your price action, so like your candlestick patterns, those tend to work better on shorter time frames. So like your 30-minute and 1 hour time frames, maybe even 4 hours. Okay, but your longer term time frames will be used to identify the overall trend and market direction. And again, we will use all of those together with key support and resistance levels, trends, patterns, indicators. Okay, so what we look out for on the higher time frames will be key graphical levels. This horizontal levels that we're talking about are those that we just went through. So your support, resistance, pullbacks, overlaps, all of those. Trend lines, trend channels that we also just went through. Some breakouts, big moving averages. These big moving averages and Ichimoku, those are your indicators that you would use after doing all of this technical analysis. Big Fibonacci levels, those are those we cover more in depth in our Fibonacci series. And lastly would be your price action, especially the prior bar. So this is what we're talking about today, what I was talking about with the candlesticks and all of that. Okay, let me just answer some of the questions now. Um, okay, I can show you how to set up Ichimoku in a little bit. What is a 3 super trend indicator? And does it work on MT4? So the super trend indicator strategy, this kind of um not really related to today's topic, but it's basically it follows the trend, obviously, and it's based on the ATR and closing price. So ATR is your average true range, and it helps to determine the trend of the market. So of course, there's an uptrend when the price is above your super trend line, and downtrend when the price is below the super trend line. Does it work on MT4? I'm not super sure. I don't think the mobile app supports custom indicators like that. But I'm not too sure. Maybe it works on the desktop instead. Um, yeah, maybe you can check on that. Because I don't think, because I think super trend indicators are custom indicator, and your MT4 mobile app cannot set up custom indicators, if I understand, if I remember correctly. Okay, setting up Ichimoku on your on your phone or laptop. I can show you how to do it on TradingView. Let me just open my TradingView. Okay, so if this is just a random chart that I have open, if you click on these indicators, and search up Ichimoku Cloud, okay, yeah, it show up like that. It might not show up like this actually. Let me, okay. So this is your Ichimoku Cloud, okay, and basically you just click on indicators, search up Ichimoku, and this is what it'll look like. Click on settings, and there's actually a lot of different lines when it comes to Ichimoku. I'm not going to go through in depth what they each represent now, but I'll tell you that we normally just look at the cloud. Okay, so we normally just look at the plot's background. If price is moving above the cloud, it's a bullish signal. If price is moving below the cloud, it's a bearish signal. So that's one of the quickest ways to use Ichimoku. Yeah, so this is on TradingView, if which you can use on your phone or laptop as well. So for Fibonacci, which I didn't really have time to talk about in depth today, but I did kind of mention it in our price action. So you can take a look at this website. It's just um it's a free website to use. It's just the forexarmy.com. You can look at some free videos that we have on YouTube on retracements, extensions, some guidelines. Yeah, so what are the different levels that we use, how to use them, how to draw it so that it's valid, how to avoid invalid levels, negative levels as well. Because we use 4 different techniques when it comes to Fibonacci. So stay tuned for our Fibonacci webinar series. It's a 4-part series, and we go really in depth into each of the Fibonacci techniques as well as different examples. But in the meantime, you can take a look at this as well, in case you were curious, since I did mention them a couple of times in today's webinar. Yeah, I think that's it for today. Um, yeah, let me know if you guys have any other questions. If not, That's all for today's session. Thank you guys so much for joining me. I hope you guys found this session helpful, and I'll see you guys again next week. Thanks, everyone. Bye.